Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today. We have Abu Dhabi's MGX invest $2 billion into Binance, its first institutional investment that it has received. We've got Ripple securing the Dubai license to offer crypto payments in the UAE. And also, Bankerbot ends Grok's unintentional token creating spree by disabling interactions on X. We'll also get into the majors as well as all of the other favorite tokens, and discuss some general market rotations. And specifically today, we'll get into a few opportunities that we are looking at to see just where we find allocating capital might be interesting over the next week or two or few months. So stay tuned for that. I've got Legendary in the co-host seat with me today, ready to get into it. Just a reminder, friends, nothing that we do, say, or think here is financial advice. This market is very risky. We don't know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday, it is the 13th of March. How are you doing? How are you feeling?
GM Jim, I'm doing pretty well. I'm trying to figure out what we are trying to signal today, given that we are both unintentionally color coded, both wearing red, on a market that's actually not looking too red today.
Yeah, I don't know. I don't know. It was definitely amusing to see us wear the same colored clothes, but I mean, you briefly flirted with the idea of changing because it just looked a bit funny. But um, usually you do it when it's a red day, though. So why did you do it today?
Just intuition. I mean, if we look,
Is
if we
this
look,
intuition of what's to come?
it's intuition of what's to come. I mean, I just read before the show that Trump is now planning to declare any attacks on Tesla dealerships as domestic terrorism. So it feels like we're in for a couple more entertaining news over the second half of the week and maybe a bit more volatility as well. So let's see where this will go.
Yeah, I think that's definitely true. More volatility to come, I think. How are things otherwise? What's going on in general? What's kind of on your horizon at the moment?
Honestly, figuring out some real life things in terms of also off ramping. Start to think more about like fiat based investments as well. I did buy a bit of gold. Just want to take a couple more chips off the table and figure out, because I feel like for the last 8 years, all I've been thinking about is my crypto portfolio strategy, and
Yeah.
I'm as bullish as I've ever been on this sector. But I'm also feeling that I do want to have a bit of diversification going, especially as someone posted. I have no idea who it was. It was a couple of weeks ago. Someone posted that it is not normal for the rest of the world to wake up, look at your phone, and figure out if you're rich, if you're broke, if you made money, if you lost money, if all the money is gone because you got hacked. And just thinking about it, I never realized how like actually stressful living this life is with 99% crypto exposure. So I've been thinking, might take the time now to rebalance it a bit. Also see English in the comments saying, quote unquote, market doesn't look too bad, reeks of complacency. See you guys at 65K. I would love 65K.
Wouldn't mind it. Wouldn't mind it at all. The only thing I'd say in response to what you just said is, you know, maybe famously or infamously, I only downloaded a crypto app like right in the heat of the bull market, like in the start of January or by the end of December. I for the first time downloaded a crypto app to track coins that I was either in or just even to look at the majors. Like, I'm not a watcher. To be honest, I just log into Twitter each morning and you get a really, really good sense of where we are. And I actually put a tweet out very recently, which was for the first time in ages, it's very, very difficult to get a sense of where we are in terms of price from the Twitter feed because everything was so schizophrenic in the last few weeks. I feel like I actually need to check now. Whereas for the majority of time, you can just kind of log in and get a really good sense of how we're doing. I think we're probably trending towards that moment in time again as things kind of quieted down, and we've definitely noticed maybe some of the tourists that were here have definitely departed. Arguably, some of the people who are not even tourists have departed. Some really prominent names who are obviously very much integrated into crypto and participating in crypto have simply disappeared. And I think they probably take a number of people with them. So, it's been a bit of a reset button across the board, which we've definitely noticed. And yeah, I guess we take it from there. But look, let's get into all of the main stuff today, starting with the price action to get you up to speed with what is going on, then followed with the headlines. We've got Bitcoin is pretty much calm. Things have kind of settled down today. Bitcoin is flat at 83. ETH is flat at 1. Gosh, I say things have settled down, but ETH is now under 1.9K. It's just a touch under 1.9, but it's still 1.8 something. XRP is up 3% to 2.2. BNB is up 4% at 580. Solana is up 1% to $126. Getting into the meme coin side of things, let's see what is going on here. Doge is up a few percent to 17. Pepe is up 16%. Trump is up 5. Bonk is up 3. Whiff is up 8. Pengu's up 2. SPX, Murad's coin is up 20. Fartcoin is up 22. Just going to double click in one of these to maybe give people a sense of what is going on. Like, yes, some of these things might be up, but it's kind of exactly as I described, maybe as far back as December or January, where you might get these big bounces in the exact same way with NFTs, where you thought Moonbirds was valuable at 26 ETH because it used to be valued at 30, and so it bounces up to 28. And it's like, okay, well, that's only fine for a short period of time because this is on the way down. If you're looking at the Fartcoin chart here over the last month, it's basically that, like big drawdowns, huge spikes up, big drawdowns again, and over time it's just continuously drawing further down. I don't know if we see a bottom here, but that's the trend, at least up until now. That's the meme coin side of things. Getting into the main headlines, Abu Dhabi's MGX invests $2 billion in Binance. It's its first institutional investment that it's received. Legendary is going to break down some of that information there. Also, on the UAE side, Ripple has secured the Dubai license to offer crypto payments in UAE. I'll be breaking down just the core details of that. As we've noted before, a lot more kind of institutional style pieces of news that are becoming super important. We're definitely trending in that direction at the moment. And BankerBot ends Grok's unintentional token creation spree by disabling interactions on X. Obviously, Grok has 1 million followers on X, been creating tokens left, right, and center. So I think that's pretty noteworthy. We'll discuss that in just a little bit too. Legendary, is there anything happening on the NFT side? I've got one to particularly point out, but what have you got?
Yeah, absolutely. Let's take a look at NFTs in general. Again, we are still in a down move. Yes, we did correct a bit yesterday, but also sold off some of these gains again. Bored Apes, just a touch under the 13 ETH floor at 12.98 ETH for them. Pudgy significantly under 9 ETH again, and 8.75. Azuki is just continuing to slide down lower and lower at 2.25 ETH. Two other things I wanted to point out, apart from the typical collections we talk about, is the Good Vibes Club. On the one hand, that is coming to Abstract, or it is already has minted. It is in collaboration with Super Rare. Very simple mission that they said they just want to be the standard for quality when it comes to 3D PFPs. That minted at 0.069 ETH. It's currently sitting at a 0.14 ETH floor. Ignore the minus 86% there. That's not accurate. Sitting at this floor and waiting to be revealed. That is on the Abstract side of things. And then Quantum Cats also trending down lower, touched obviously on the Taproot Wizards mint yesterday. They are now down to 0.125 or 126 BTC, used to trade at around 0.2 BTC. So just two different ecosystems where I wanted to point out an additional collection.
Sounds good. Good ones to point out. The one that I would point out, which actually comes out later in the snapshot bit now, One Gravity, which minted yesterday from our partners, Zero G Labs. I think it was a free mint, and basically just surged to 1.6 ETH, super fast. I'm not sure the full details. I think it's probably got some connection to either a token or I believe when Whale reported on it, he talked about it being in connection with the nodes apparently. So clearly very valuable. Someone's done the maths there. We'll look into that more. And then the other one I wanted to point out on the NFT side is Infinex. Infinex, I've been speaking about, if you've been following my account, been speaking about them for ages. I'm an early investor. Up to 3 ETH now. They've up 20% on the day. I think they put out a tweet where if they go up another 50, if they go up to 3.5 ETH or 4 ETH or something like that, they overtake CryptoPunks in market cap. It's not a great comparison in the sense that obviously CryptoPunks is like a no utility, highly long-term art project that has turned into this incredible collectible, and important on the cultural side. Infinex is obviously a bit of a different play. There's like an FDV in mind. There's a product. There's a thing that there's a product, working product where you can swap tokens across different chains, and they've got other things planned where you can become this DeFi protocol. So there's other maths that you've got to do there, but I've thought that was undervalued for quite some time. Seems to be repricing at the moment. So wanted to bring that.
Is it repricing because you think it's undervalued, or it's like also part of the pump just because it's tied to the FDV, are denominating that collection more in USDC terms, and this is why it's moving up in price because ETH has been sliding down?
I think it's both. I think in this case it's both, because maybe a while ago it was trading around the 3K. Like, so if you turn it into dollars, maybe it was trading at around 3K for a period of time. And then ETH started dumping. It also started moving up in ETH value, but then the USD value was still moving up. So it was trading around 3K, then it was trading around 4K, then it was trading around 5, just under 5. And I guess now it's just under 6. So I think it's both, to answer your question. So yeah, I mean, we'll obviously keep an eye there. As I said, I'm an early investor and thought that was a good one to bring up. Very happy with my early investment there. Getting into, the rest of the Web3 roundup. Haven't done that yet, so let's get into that. Get up to with everything else you need to know for the last 24 hours. Bank of Russia proposes crypto investment pilot for high net worth investors. We also had Rumble announcing a further 188 Bitcoin purchase for its treasury. Hyperliquid experienced a net outflow of $166 million yesterday after the HLP vault lost $4 million in one day. Coinbase delisted a bunch of meme coins, Flocky, Turbo, and Giga, I suspect because of kind of low trading volume. Transient Labs, on the maybe more artistic side, received an investment from Super Rare to, I think, try to focus more on the art side rather than turn art into some kind of meme coin, which I think some of the other platforms are accused of doing. It's $2.5 million investment there. Zero G Labs, as I mentioned, Genesis NFT mints out for free and surges to 1.6 ETH floor. And that's that. That's everything else that's going on in the space. Legendary, before we get into the main stuff today, what is catching your attention from the rest of the news? And then we're actually going to do a little bit of a segment on what we're finding interesting, where we might be moving our capital around at the moment in this kind of choppy, challenging environment.
Yeah, absolutely. Have a couple of thoughts on the Web3 roundup. Then also would like to hear from Funky, who has his hand up. Two things standing out to me really. One is Rumble. It's just good to see that it seems like more and more companies are adding BTC to the treasury, are thinking about ETH as a part of the treasury, with the one biotech company that we reported on. I think occasionally we pull up that BTC or Bitcoin treasury website and see that there's like more and more companies doing that, and it becomes a bit more normalized to have BTC as part of your treasury as a corporate entity, which I think is always a good thing. And then the other thing that was standing out is the Coinbase news with the delisting of the 3 memes. I think we also recently had a Binance news along those notes where they moved the listing and delisting process a bit more, at least for the alpha sector or segment, into the community's hands as well on their end, but definitely have started to speak more about delisting. And it's interesting to see that like Coinbase is also following that, which to me could point to a world where they are like becoming maybe more experimental with listings and they're like quicker to onboard things, but as a result of that, also quicker to offboard things again from their exchange. So that's something I want to observe, if this is just a one-off or if we'll see a bit of a like change in strategy, which ultimately would be a result of the meme coin cycle, which led to an enormous amount of tokens being created. Or now that this obviously seems like it's dying down and the token like the amount of tokens created is still very high, obviously on a daily basis compared to the last cycle, but the relevance of them is like nearly zero. So maybe now that the meme cycle looks like it's over for now or for the time being, Coinbase, Binance don't have the need to adapt their listing strategy. So that's definitely something I want to keep an eye on.
Yeah, that's a good point. I feel like it would not be. It's like the question would be: is that a leading indicator or a lagging one? I think that's a lagging one in the
Probably.
sense. Yeah, like they've seen everything happen. The signs, it's kind of written on the wall, and now they're taking that decision. I wouldn't take that decision. It's more like this is the conclusion that we've come to, rather than okay, things are going to get loads worse. But I agree. I think lots of similar things will happen now because that is the situation that we're in. Everyone has seen how the market has moved away from that type of meme coin trading, and I think we see more of that. But I don't think it like. I mean, I was going to say I don't think it will be significantly worse than it already is because a lot of the significant moves already happened. But with this stuff, like you could be 95% down and go down another 95%, right? Depending on the holder base. So I wouldn't even commit to not another 95% drawdown on some of the truly worthless stuff that people legit just don't have interest in anymore. There are going to be people who haven't logged in, for example, and have saw the markets down, kind of depressed. And then one day they're just gonna be like, oh, what about that position that I have? That stupid position. I'm just gonna come in and like one clip it, It was kind of like at some point in time, I think that's what saved NFTs, where the argument was, well, it's not that people don't want to sell, it's just they can't be bothered to log in and list it. So it's kind of that similar feeling in a really, really down market, I think. Interesting points on the meme coins. Let's go to Funky though. Funky, your hands raised. Welcome to the stage, my friend. What are you thinking here? Anything catching your attention from the roundup? What's on your mind?
Just real quick, and Jam gang, everybody keeps glossing over the fact where it talks about these delistings for Coinbase. It specifically says in the post in New York only. So
Oh.
this I don't think is a Coinbase wide delisting. I pointed this out to Kook when he was gloating, and it's because, and I will tell you this because I have friends who live in New York State, and it is highly restrictive in terms of the things that are like. It's almost like they have a different version of the Coinbase app, whereas I can buy USDC and send it to pretty much like any chain I want that has a USDC deployment. In New York, you can't for some crazy reason. And so the app version of Coinbase in New York State is different. And so I think people are missing that in the fine print. Not to say that some of these tokens aren't worth delisting, right? Like Floki and Giga. And there's probably not a lot of trading volumes to the point that Legendary was making it. But I think people are just glossing over that it is in New York only for whatever reason. So just want to bring that up.
That's very, very helpful context. Also makes me think it's a bit ironic since the couple of last shows we've been talking about Brett being in New York being a hub for crypto in the States, but then also New York being so super restrictive that we have apparently a separate Coinbase version for that follows its own compliance set of rules.
It's where bit licenses and all these other restrictive things that have happened legislatively at the state level for many, many years. So it's not all that surprising. And hopefully that will change, right, with the turning of the tide. But it is a very blue state. So, I mean, you think about that, that's probably got a lot to do with it. So it's just something to be mindful of. But yes, there is certainly a subtle irony there.
Interesting. Excellent additional context, Funk. I think that's really, really helpful to know. I think we were basically reporting that in the wrong way. But so yeah, very helpful additional context. Let's get into a couple of opportunities that we're looking at. I think, we're obviously super committed to the space, but in these moments of times when things are a bit down, things are a bit lethargic, people are maybe licking their wounds a little bit. I honestly just get super excited about finding the things that other people are going to be too lazy to do, or that they've logged off and they're not interested, because it means that lack of TVL or lack of TVL in time that they're putting in means the greater share for me, greater share for us, greater share for the people who are kind of sticking with it and applying themselves. So wanted to do a bit of a segment here on what we're looking at, what we're finding interesting. It's not like 100% endorsements of the things we're saying, just like I mentioned Infinex earlier. Seems pretty good to me, but we're just kind of working through our thought process. what's kind of catching your attention, Ledge? Where are you allocating? What are you thinking about? Where do you want to spend your time and capital?
Yeah, there's really two things where I'm throwing my money and time at the moment. One of which being Ethos Network. Ethos Network, we talked about it on the show. Basically, this platform where you can review other users and rate them as basically EV positive or negative for the space or neutral, and contribute around that. I think it's a super interesting concept, because it's sufficiently different from Kaido, which has obviously been leading in that segment. It's sufficiently different, in my opinion, from Friendtech. It works as an overlay on X, so it doesn't necessarily need to take you away from the app where you already spend hours of your day on. And you have a pretty easy way of, using the app daily, collecting XP, vouching for other people, collecting more XP by that. So to a certain extent, I just use it as a way to park some of my ETH there, because I vouch for people who I genuinely believe in, and it's, well, obviously ETH still trends down. So I wish I could vouch with stable coins instead. That would be very, very lovely. But that's one of the things I'm currently doing. That's probably also more like on the time intense side of things, because I do spend like 20-30 minutes a day on that app. And the other thing where I definitely throw more capital at is Sonic as an ecosystem. Kind of reminds me back of the good old DeFi summer we had now, what is it, 4.5 years ago. And there's lots of things to honestly do on Sonic, a lot of them being pretty degenerate. Obviously need to start somewhere, need to start bridging your funds over. It's an EVM compatible layer 1 solution, which is super fast. And then what I've been doing is, because I have my stable stack, I've been going to rings.money, where you can mint stable coins there to farm points for the Sonic airdrop, which is to come for using that ecosystem. Sonic also announced that if you deploy an app there, I think under Kronia posted that 90% of the fees that are being generated on the chain go to you as the deployer of the app. So like basically vampire attacking all other EVM compatible ecosystems and chains to go there. And then you have a couple more things happening there. You have Shadow as the biggest DEX there, where some people have been farming absurd yield. I saw one guy who used an AI tool to build a self-balancing LP bot and pushed his APY to like 50,000%, and has like a fully scripted self-balancing LP bot going on there. You have Hey Anon on the DeFi AI side of things, if you want to play around with DeFi agents. You have PainSwap for NFTs. So quite a few things going on there. TVL, I think, recently crossed 1 billion, so definitely creeping up in numbers as well. And just because there's this clear airdrop opportunity with Sonic coming up, and for those who don't know, Sonic is now the rebranded token of what used to be Phantom in the last cycle. It's something where I'm throwing a good amount of money at the moment.
Interesting. Yeah, I keep needing, I just can't get around to it at the moment. So focused on some of the other things, particularly on the business side, but Sonic is just such an obvious one where it's just worth doing because it's going to do an airdrop. If you've got stables lying around, might as well allocate. I keep putting that on my to-do list and I can't get around to it at the moment, but I think that's an important one. On my side, two things that I'm finding. One that I feel is like more of an opportunity. The other one is more of just something I find interesting. Arguably, it could be an opportunity as well. I don't know. The first one, I think I've shared this before, is ethereal. So the thesis for this one is that it's a DEX that it's getting built on Athena's network. Athena obviously being the one of the biggest winners of the cycle. It is $6 billion FTV token, synthetic dollar, super successful. This is the DEX that's going to be built on its network. And there's currently a program where you can just supply liquidity. Like you can just chuck in some USDE. It does have to be the Athena version of the synthetic dollar, and you just sit and earn points. So I thought that's an awesome thing to do. It will, yeah, I just think that's great, right? Because essentially my maybe simplistic understanding of it, or simplistic way to explain, is like they're trying to build a hyperliquid on top of the Athena network, leveraging this already really successful version of the dollar that they've created. So, it's not without risk, because obviously you've got smart contract risk and all of those things when you're providing any type of liquidity. But my favorite thing is doing things that are lazy, so I can just chuck the money in there and wait. So that is one of the things I'm looking at, or that I've provided some capital to. And the other thing is Wildcat. We mentioned Wildcat yesterday, and we thought there was a cool thing on the show, and we said, "Oh, we need to do a bit more research on it." So Wildcat, as we said yesterday, is this protocol that's been created so that registered legal entities can seek under collateralized credit and create markets defining the terms they seek capital under. It's not underwritten, so it's like kind of unsecured line of credit. But the interesting thing is this protocol is like, who is the borrower? So in this case, the borrower is actually Wintermute. Obviously, Wintermute, if we click through here to get to the details of the borrower, Wintermute is, if you don't know already, I probably do, the global algorithmic trading firm, liquidity provider, and leading OTC desk in digital assets. With billions in average daily trading volume, Wintermute offers OTC trading and provides liquidity across 60 plus centralized and decentralized exchanges. It's an active player in the ecosystem, investing in early stage Web3 projects, and supports traditional financial institutions moving into crypto. So huge entity, loads of capital, making a lot of money in general. And you have the opportunity to lend to Wintermute via this protocol. So the way it works, you can see here, I'm showing this on screen for the people who are watching in, but you may, for the people who are just listening, you've got different assets that you can lend to them, and there's a particular rate that you'll be earning. The crucial thing to note, so for example, CBBTC, you get a 3.75% APR, which is pretty strong, actually, pretty high for Bitcoin. Obviously, some people would never want to take that risk with their Bitcoin, but just putting that out there for you. For ETH, it's 4%. And for USDT and USDC, it's 12% at the moment. And in general, because the market has gone so risk off, 12% is really high at the moment, because in general, risk is way further down than it was even a month and a half ago or something. So that's like pretty attractive. I guess the question that you have to have in your mind about whether this is a good thing or a bad thing has kind of been articulated by OX NGMI, who's the founder of DeFi Llama, super helpful protocol which kind of helps people get all the important data when they're making decisions. But I think that one of the key issues that they suggest is that there's an adverse selection problem at play, which is that institutions that are safe borrowers, for example, will get their loans from TradFi, or just from other alternative avenues, whereas the parties that end up trying to get loans in this way, like in a decentralized way, using crypto, going direct to crypto participants, will tend to be the bad borrowers that couldn't get TradFi loans. Now, this is the question everyone needs to decide for themselves. Like, is Wintermute a credit-worthy borrower that you are happy to provide that capital to? One example being thrown around was around 3AC, was like, how would you want to continue to finance even a big name when you don't necessarily know, or it's a bit opaque what they're up to? So look, it's definitely not without risk for those reasons. But I find it interesting. That this kind of credit line is being established between crypto participants and some of the bigger entities in crypto in this kind of decentralized, trustless way. So wanted to put that out there. I think I might play around with that. I don't know if Wildcat's going to have an airdrop, so I'm not entirely sure about that. I tried to figure out its details using Grok to figure out if there was like a raise or if there was going to be some type of incentive at some point. That I cannot speak to, but I find it interesting nevertheless. So that is what I'm thinking. Legendary, any further thoughts on that? Any questions? And then Funky, your hand is raised. Want to come to you too.
Yeah, I did take a look at Wildcat as well yesterday. I think for the USDC side of things, with a 12-13% APY that you can earn on that, that is tempting, kind of sitting somewhere in the middle between the 4 or 5% you get on Aave and the 20% you would have gotten on Hyperliquid before that ETH whale did his thing. And definitely, you know, there's a risk premium for doing that, but I'd be, I think, interested in parking a relatively small amount of my stables in there. However, what I probably wouldn't be too comfortable with is like putting BTC there. And last time I checked yesterday, this also seemed to be the market consensus side or USDT side of things on Wildcat, but not even one BTC was put in yesterday. I don't have the current figures right now because I just didn't check. But definitely exactly what you said, that some people might not be as comfortable to throw their BTC in for a 4% yield, seemed to be consensus.
It's so funny. Like, so the amount is pretty psychological, right? In the end, it's all just money. But 0.06 BTC has gone in.
Oh, that's exactly the figure that was displayed that I remember from yesterday. So basically, nobody put money into BTC from yesterday overnight.
No, people do not want to provide Bitcoin. The remaining, they want to. They've got capacity for 200 Bitcoin, and they have someone has provided 0.06. So there's a lot more going on the stablecoin side naturally. So USDC being the favorite, almost 4.6 million USDC, and then 600 grand of USDT. So over 5 million provided on the stablecoin side, which is pretty interesting.
So I can basically put in 0.1 BTC and flex on the timeline that I am Wintermute's biggest lender when it comes to Bitcoin. I think that's worth the post. I think that's worth the flex.
Is the risk? It's not even. Is the risk worth the liquidity provision? Is the risk worth the post in this specific case? Funky, what's your thought on this? Is it on Wildcat? What do you think of this kind of new way to establish a credit line between crypto participants and someone like an entity like Wintermute?
First and foremost, yeah, that was a great breakdown because I really hadn't looked into the Wildcat stuff. So I appreciate you guys doing that. I was actually just going to contribute to the conversation in terms of like where you're trying to earn yield, because I know I've mentioned it before very briefly, but I can give you some very specific numbers. I am killing it on Bob right now. So Bob, as you guys know, hybrid Bitcoin, they actually have a hybrid BTC option that you can deposit and earn 4% yield on. And it's a partnership with Veda Labs and Pendle. So you're like basically staking it in a Pendle vault. They're deploying that liquidity across several different strategies. That's how they're earning the 4% passive yield. But as a dabbler in DeFi, because as you guys know, don't really want to expose much of our Bitcoin stack to anything that's smart contract risk related, we do, I do play around in DeFi. And so they have this Bob Rise campaign where they had a 750,000 OP token grant, and they're literally layering on incentives on top of some of the pools. Like, I've never been one to deploy stables against any kind of BTC, but I'm doing it in a very small amount with just Tether and BTC because the pool's paying, I think it's fallen down now. It's maybe like 90% APY. And I'm literally just getting like 50, 60 bucks a day, which is not a huge amount, right? But I just dump the OP tokens and I immediately turn that into wrap Bitcoin. And then I bridge that back and I stake it for hybrid BTC, and I just continue to generate that flywheel. So there's a lot of crazy opportunities right now in Bob. If you are trying to dabble in sort of like the Bitcoin DeFi space, Legendary, I think you should totally go for the flex. You've got me like even considering it now. If I weren't doing so much on this Bob farming stuff, I would probably, because at most we would probably like keep like a quarter of a Bitcoin like in a wrapped version to kind of play around in DeFi and do these things. And of course, the Bob airdrop's coming very soon. I think it's supposed to be somewhere around the end of this month. But yeah, that buy, just go to bobrise.xyz and you can see the opportunities and how crazy some of the APYs are right now. I even just swapped some ETH for like wrapped ETH, the BTC, because that was paying like 60%. And I thought, well, hey, I may as well jump in this pool too. And so just to earn more, because all I'm doing is passively stacking sats every day while we're starting the show, believe it or not. I just go on, I grab the OP tokens, I dump them, and then just get more BTC, bridge it back over, and then I stake that for more of the hybrid BTC and earn the 4% on that.
I like it, man. Appreciate that additional one. We just got it up on screen now to take a look at. Legendary, anything catching your eye there?
Yeah, I currently have it sorted by TVL. What do we see? We have supply wrap BTC on the V2 of Euler for a 13% APR. I've also seen liquidity in wrap BTC, LBTC. So two wrapped BTC forms for 2%. there's quite some interesting things on there, from what I can tell. This one's interesting as well. 81% for wrap BTC USDT on Uniswap V3. That's has 1 mil in it, but that's a lot. 81% for that is a lot.
I mean, at some point though, you have to just put just a little bit of question mark. Like, let's definitely double click on those after the show. Do your own research, figure out where that yield is coming from. Because I would distinguish two things. One, sometimes you look at these numbers and you genuinely have no idea where it's coming from. The number looks too high, and there's a big question mark. What Funky just described, if I'm understanding it fully correctly, although got to double check this stuff, is you have like a core number, which is which is like a number that makes sense for this kind of market. And then you've got this like incentive number, which because they've got some grant from Optimism, or remember when PayPal USD was juicing the rewards for stable coins on Drift and Camino, you've just got like this additional yield that is like a bonus. And at least you know where it's coming from, right? Like, yes, the number was crazy and it was out of whack with the rest of the market, but specifically this is a period of time where it's being incentivized by this specific thing. So it kind of, doesn't de-risk it completely, but at least that's why it's the crazy number, because they're doing something to incentivize it. So appreciate those additional thoughts. I hope that was helpful to just get a sense of like what we're looking at, interesting things. I think we're probably going to do more segments like that, to be honest, as we kind of navigate this period where we chop around and maybe some of the more volatile activities are, maybe disappear. So we'll keep coming back to that kind of stuff. Let's get into the main headlines for the day, though. Legendary, starting with, actually staying in the Middle East region, I think, for the first and second news. Why don't you kick us off with the 2 billion Binance investment?
Absolutely. This is a very massive headline. This is the first of, we have Binance securing a $2 billion investment from the Abu Dhabi investor MGX, the Sovereign Wealth Fund. And this is basically a record-breaking investment from many perspectives, actually. First of all, biggest investment per se at 2 billion into Binance. Also, first institutional investment to come in. The transaction was fully paid in stablecoins, by the way, just because we've talked so much about stablecoin adoption. It's also cool to see that you can do ultimately $1 billion investment and pay that in stables as well, because the market cap is now sufficient to do that. And why is this relevant? Relevant for multiple reasons. First of all, from the perspective of the UAE, 20% of the 5K people working at Binance are working out of the United Arab Emirates. And it's also been a part of the continued strategy of the UAE to massively increase their crypto exposure. But that is at a completely different level, I would say, than other things that they've done, because this is a direct investment into what is the world's largest centralized exchange. Just if you look at the trading volume over the last 24 hours, Binance is clearly leading that with $23 billion worth of trading. Compare that to Coinbase, that's 4 billion. So that's a 6x in terms of volume between those two exchanges alone. And I think it's a pretty cool investment, because Binance certainly does not need the $2 billion to have them invested in the company. I think we've also seen that recently with Bybit, which is a significantly smaller exchange at the end of the day. And after the hack, where they lost $1.4 billion worth of ETH, they were able to stomach that loss from their free cash flow. And you can assume that Binance is sitting on way much more cash that is liquid and available to them. So it's definitely more about the strategic partnership and actually having the country coming in and acquiring that minority stake in Binance. And this is what makes it really stand out to me. And I'm kind of curious how they want to play this, because I tried to find some more details if there's like any direction they want to take this into, but there wasn't too much information released on that end.
Okay. Yeah, thanks very much for the summary. It's just, we're clearly trending in this direction of the Middle East becoming an increasingly important region. I think people already know that it is, but increasingly in the news, making these kind of big splashes in the crypto arena. So yeah, I don't think I have anything more to say on that. I think I don't have anything more to say on that. It's very significant and noteworthy. but let's keep it moving. It's kind of staying in the Middle Eastern region. We've got this Ripple news where they have secured the Dubai license to offer crypto payments in the UAE. So this is the specific news that Ripple received approval from the Dubai Financial Services Authority to provide regulated crypto payments and services in the UAE, making it the first blockchain-enabled payments provider licensed by the agency. I think this is really important because crypto regulations in the US are obviously easing, and globally they are becoming favorable too. So blockchains are vying for the business of institutions and governments. When we spoke to Rushi, for example, from Movement Labs just the other week, he spoke about how he personally would be advising one of the offices in Thailand to encourage blockchain adoption. And he's spoken about how politics is an important GTM strategy for basically every single blockchain now. So I think it's definitely going to be part of everyone's strategy to strike these type of deals. Ripple said it's been increasing demand across the Middle East from crypto native firms and traditional financial institutions, and has around 20% of its global customer base already operating in the Middle East. I don't know if people would have known that. XRP was up 3%, more than any of the other majors, to $2.2 when everything else was pretty much flat today. So positive stuff for XRP, whilst it's simultaneously getting reported that its case against the SEC is also reaching a conclusion too, maybe also in line with all of the rest of these investigations and prosecutions, which are kind of coming to an end against crypto companies in the US. So that's that news, Legendary. Any thoughts from you there? Any reflections? What do you think?
Yeah, I think one of the interesting pieces from that is how widespread that network is that Ripple was able to build. They now have more than 60 regulatory approvals worldwide. I think that often, we've seen XRP pumping massively this cycle. A lot of times, the question was asked, what are they actually doing? And it was also Rushi who said on the interview with us that basically lobbying becomes one of the most important things this cycle and for the cycles to come. Now that we not only talk about institutional and regulatory adoption in the US, but really globally, and you want to position yourself close to the regulators, close to institutional money, if you're building something akin to a payment network that is to be used in that context. And from that perspective, while I still don't know exactly how Ripple plans to use all of those payment services and what they're exactly offering in terms of infrastructure to governments, it does seem that they're doing a pretty good job at getting around the world and collecting those approvals. And I'm curious if there's ever going to be a flip the switch moment where it's going to be clear how this is going to be used in a standardized way across governments, or if ultimately to them the token price won't really be the relevant thing because they're building, by providing that infrastructure, what I could view as a potentially pretty profitable business going into the future if they continue on the roadmap like that.
Yeah, it sounds that way, to be honest. It sounds that way. One thing that I forgot to mention yesterday when we were talking about the strategic reserve and the digital asset stockpile, although Saylor speaks about Bitcoin, when he speaks about Bitcoin, one of his arguments for it is that people need to, or governments and countries need to own their own airspace. They need to own their own land. They need to own their own airspace, and they need to own the kind of cyberspace. And so the argument is, when if you lose control of the airspace, you lose control of your country. And the argument is, well, cyberspace is the new place where those kind of transactions take place. All of this trade is taking place. So you need to own the network. The reason why I think that argument falls down, and this is probably one of the best arguments for having this stockpile, if you believe in that line of thinking, the argument falls down because Bitcoin is not actually used that much for the transactions in the way that he's imagining. Like, the reason why you want to protect these various places is to maybe keep trade routes open and to keep transactions moving, etc., etc. So yes, there are other reasons to hold Bitcoin, but I don't know if that would be the specific one, because the trade routes really are taking place in elsewhere. They're taking place on Ethereum at the moment, even though the token price is down. It's taking place on Solana. And increasingly, things like XRP, if they're going to go out and sign these deals, if Rishi from Movement Labs is going to go out and sign these deals and kind of advise different governments and bring them onto the blockchain and bring them onto their own blockchain, that's where the commerce is taking place. So I think that would be the best argument for having some type of stockpile, to the extent that you feel like you need to own the network on top of which that commerce is taking place. And yeah, the people who sign those deals will probably put their token in a good position and their chain in a good position. So that's my reflection there. Unless you have anything else, Ledge, happy for you to take us into the next news, which is slightly different now.
Got one more thought on that, and then I'm gonna transition into the final news for the day, which is kind of connecting it with Mesh, the company that we spoke about on yesterday's show as part of the Web3 roundup. That was that company that raised 82 mil in the Series B to build that global stablecoin payment, or not only stablecoin, crypto payment network that is also to be used by Revolut, that is to be used by MetaMask, and kind of also being a bit of a competitor to, for example, what Shopify is doing with their payment integrations for crypto as well. And that brings me to the point that I wanted to make, is the discussions that we had on the show, how to get exposure to the stablecoin business, because this is growing. Payment services are growing. You have Ripple positioning itself as a payment provider for governments to simplify it in a global context. You have companies like Mesh doing that. And I feel like I see the stablecoin market kept going. I see more of those payment deals going through, but I don't have sufficient exposure to that. And I'm still struggling to find a way to get that exposure, because I can't be a part of Mesh, Series B. I can't be a part of. I don't think that buying Ripple, for example, is the answer to that. I don't think buying any token is like sufficiently representing how bullish I am on that payment services industry. Even if I would buy the Coinbase stock, I do think there has to be a better way to play this, but I haven't figured that out yet.
Yeah, that's one of the key questions we keep asking, right? Like, if you want to bet on stablecoins going up over the next decade, where do you put the bet? And I think some conclusions are Bitcoin, because some percentage of coins flowing of stablecoins onto some percentage of new stablecoins will find their way to Bitcoin at some point in time. I think there's a legit question mark against that, in the sense that the way that people are going to get onboarded moving forward seems to be in a far more kind of corporate way, where they might not see Bitcoin in the same way, although it's also being marketed to them in a completely different way now too. So depending how that happens, I think that's a reasonable one. Coinbase, as you mentioned, is also a reasonable one. And then, yeah, maybe some of these other chains. Complete side note, one thing that I put in our chat, like, it might have been 2 months ago, I saw other people talking about it today. It's like, how do we get exposure? Okay, we're bullish on stablecoins. Robotics. How do we get exposure to these damn humanoid robots? That's what I kind of want exposure to. And for me, Tesla right now down 50% off the top. I was telling you this like 2 days ago or yesterday. Surely that's something interesting, not because of the car. Forget the car. Like, yes, people are getting super annoyed about the car, and people are Trump is needing to say that he's going to buy a Tesla to make people feel better about the car, whatever. You've got this kind of short-term politics taking place, but the robots, that's where my eyes are. You saw Andrew Kang, a very prominent investor in the space, who I think is obviously very much involved in crypto, but also with a couple of specific early investments into robotics companies, which he was speaking about, I think, overnight. So worth having and keeping an eye out there. I don't know if you have a final thought there, Ledge, before just kind of share the final piece of news.
Yeah, just one shout out from the YouTube comments. eBrink made a great point that if you want to play the stablecoin market game, Circle, when it does its IPO, is also a good option to keep in mind. But that with that being said, we have 5 minutes left, and definitely want to get the last piece of news in. Also kind of has something to do with robots, so that was actually a nice segue to get into. It's about BankerBot ending Grok's unintentional token creation spree by disabling interactions on X. You reported on this a couple of days ago, when basically there was an agent-to-agent interaction prompted by a human between BankerBot and Grok, which led to a token being created that did run up to 40 mil in market cap. And as is the case when things like that happen, many more people want to replicate the same. And that resulted in a total of 17 basically noteworthy tokens created by BankerBot that followed Grok's instructions. And BankerBot decided to put an end to this. They said, look, Grok has not been built with the thought in mind to be able to be the admin of its own wallet, to be able to partake in the crypto space. And for that reason, we basically changed BankerBot in a way that it's not interacting with Grok anymore. So if someone else is now prompting Grok to get an input for a token that then is to be minted by BankerBot, which was the case with those 17 tokens that have been created, BankerBot will not engage with Grok anymore and won't follow these instructions because it got a bit too crazy on that end.
I think it really just shows the limitations in some of these bots. So AI agents / bots, however you want to describe them at the moment. There's just some real limitations, isn't it? Especially on the social ones where you can interact with them, and the whole point of them is that they're supposed to be able to take on-chain actions, and so you can coax them into doing something that maybe the developers have not fully thought through the consequences of. So I think that's one of the challenges at the moment, and
it's not kind of right, because this is an attempt to fix it, but you could probably build a bot that is Grok's personal assistant, and that is being asked, and that bot is asking Grok, just put an agent between the agent to agent interaction in the middle as the middleman to communicate between BankerBot and Grok, and you still could paint the same picture. So I feel like this is, but while this might sound like a ridiculous example, I do feel like this is going to be a general challenge, how we want to deal with agent to agent interaction, not only in a like one-to-one setting where Grok speaks to BankerBot, but also in a many-to-many setting, thinking about AI swarms when a ton of agents speak to all of the agents in every possible way and combination, and then you as a human are not really able to follow that conversation anymore because there's way too many interactions going on. That is when it's becoming really interesting how we will basically bring this new tech to life, and all agents can do the different things, and at one point they can interact all with one another, and how we can solve for some of the potentially very unintended side effects of that, because this ultimately doesn't matter, right? Someone launched a token, went to 40, people made money, people lost money, but nothing groundbreaking happened that would be devastating to the whole ecosystem. And I feel like the more agents you then have who are interacting on a swarm basis with one another, the more unpredictable the potential outcomes of that become. And kind of building this framework around that will become very interesting.
I think the mistake is in the name at the moment. Like, if you think about an agent, the trouble in the name is that it implies some level of agency, which some level of agency and independence, which is independent from you, the person who is instructing it. Whereas when you ask people how you really use these models at the moment, most people use the word as an assistant. Like, most people will say super helpful as an assistant, kind of have it open in one tab. Maybe some of them have taken over Google. You don't need to use Google anymore because you're using that instead. Maybe some people don't need to, most people are using it in like a really, in a manner that is assisting. And maybe the way it needs to be built is more like, look, just if you get asked to do something, or you're supposed to, or whatever your model is suggesting something, just check in with me. Just check in with the person that is, got that actual hand on the money. Maybe that will be the better way to look at it. Because I think there's just a challenge in the framing of it at the moment, and unless there's some other kind of way to fix it. But that's my kind of just initial thought there. Any final stuff, Ledge, before we closed out for the day?
Nope, nothing to add to that.
Okay, there we go, guys. Hope that was interesting. We did not only the headlines, but we're going to keep trying to provide some additional interesting stuff. Oh, just muted myself. When it comes to like new opportunities, obviously in a down market, it's as important, I think, to stay alive, stay curious. That's how we position ourselves well for the next leg, whenever that comes. So hope you had a great show. Hope you enjoyed it. Thanks, Ledge, as always. Thanks, Funky, for your contributions too. We'll be back with you tomorrow on X Video, Spotify, Apple, and YouTube. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.